Yeah. So welcome to the lecture number 29. It is on the central bank digital currency and blockchain. So this is also one of the current topic where blockchain is better helping. So first we will see that what is central bank digital currency. Every country is having their own, I can say, fiat currency. You are having the like physical currency notes, 1 rupee, 10 rupee, 20 rupee, 50 rupees. But that you need to carry. It is paper based. You need to carry. To perform the transaction also you have to give. But that is like physical currency. If same value is given to the digital object, that is what digital currency. So every country is having their own digital currency, which can be stored into their digital wallet. So suppose if I am having the mobile app, which is my wallet, instead of carrying the physical wallet, I will carry the digital wallet in my mobile, and I will store my digital currency, which I can withdraw or I can get it from some authorized bank where my account is there. So this is what the I can say central bank digital currency. But as it is like digitalization based, so blockchain is required for the security, immutability. So blockchain features are required for the proper implementation of the central bank digital currency. So central bank digital currency, it is a digital currency issued by any country's central bank. So every country is having their own digital currency. Its value is same. So try to understand the difference between the digital currency and cryptocurrency. Here the value of the digital currency is same like the physical currency. But in cryptocurrency, value is being changed. Similarly, like cross-border, if I want to perform the cross-border transaction, I have to convert my whatever value for that particular digital currency, that should be converted to the what? That from where I am purchasing the items, where I am performing the transaction, that currency conversion should take place. That can happen through the physical currency as well as the digital currency. So it is like similar to the cryptocurrency. It is in the digital form, but value is fixed by the central bank. And many countries are developing the CBDC, that is like transition to the digital currency. And with the advancements of the digitalization, this is gaining the more popularity. Means you need not to carry physical currency. Then you will ask, sir, we are using the UPIs. That is also one of the kind of digital. But in UPIs, what is happening when you are performing the transaction? What is happening? The transaction is being authorized and verified by the bank. And then the transaction means whatever amount you are transferring, that is done through the bank. And then that person is getting that amount in the bank account. But here you can perform transaction between wallets. This is the difference between UPIs and the central bank digital currency. If I am having wallet, I will scan the QR code where I want to transfer the money. Transfer of the tokens will happen between person, and later that person can redeem those tokens from the central bank. So there are different models that we'll see later. So in India, digital rupee, e-rupee, the value of one rupee is the one, as same like the physical currency, which is issued by the Reserve Bank of India in digital form, and it is offering the features same like the physical cash, like convenient to use, guarantee of the RBI. If I am holding the digital cash in my wallet, so RBI is giving guarantee that I can redeem those tokens and I can get the cash. So here all I can say ecosystem of the transaction can happen through the digital currency instead of physical one. So it is like paperless transaction through the digitalization, and currency is also paperless. And settlement is happening at the bank level. Maybe central bank or the authorized banks by the central bank. So e-rupee is stored in the user's digital wallet. E-rupees will be stored in the user's digital wallet and can be used to receive, send the money and or make the payment for the transaction just like the physical note. Only just giving value. Even paper is also having value as it is issued by the RBI or bank. That is why it is having value. Otherwise it is just a paper. So same thing like digital currency, the digital object is having the value which is authorized and verified by the RBI. That is why it is having the value. Otherwise I can create my own digital currency. But it should have some verification features. Fine. It should not be duplicated also. Otherwise I can create an amount of, I can say digital coins. So it should not have replication or duplication also. But what advantage is it is giving? Lowering the cost, financial inclusion, because as it is removing the intermediaries, as it is giving the less cost involvement for the settlement of the transactions, like peer to the person transaction or person to the merchant transaction, and settlement is happening later. So it is having the less cost involved, and that is why it can involve everyone everyone can be involved in this financial inclusion, and tracking can also take place there where transactions are happening. So it is helping for what? Preventing the money laundering. Fine. So you can track the financial crimes also. So it is like cashless transaction. So this is the report. These are the pilot banks where different apps are proposed. So these are the banks authorized by the RBI for digital coins or digital cash. That is what central bank digital currency. So e-rupee app is by the RBI. So if you go to the portal of the Reserve Bank of India, where links of apps are given, Android app and Mac OS apps are given, you can download that wallet and you can purchase the digital coins by paying the cash. Once coins are purchased, that coins can be transferred, and if somebody is giving that, your wallet will be maintained. Fine. If you are only purchasing, your wallet will have the nil value. Your wallet will be null. So CBDC is a digital form of rupees in case of the India, where UPIs is the means of payment. UPIs are used for the payment. It is unified payment interface. It is for payment. It is not showing the currency. So in addition to being used for the payment, digital cash is also serving a purpose like storing of the value in your digital wallet. It can be withdrawn from one's bank account and it can be kept separately in the wallet. In case of person to person and person to merchant payments, which is made at the CBDC QR. So I can just, through that wallet, I will scan QR and I can pay, same like the UPI. But UPI is showing what? It is for the payment. And this is the digital cash. In case of UPI, when you are doing payment, it is being verified by your bank, where your account is there. And also it is being verified by the bank, where the person is having account to whom you are transferring the money. And then financial settlement is happening and that person is getting that money. Fine. Otherwise, if transaction is failed, it takes 2-3 working days to settle it back, where it is having the cost involved. This is like service cost. But if it is allowing person to person, like wallet to wallet transfer of the digital coins with proper security feature, then it will be widely adopted. So So for person to person or person to merchant payments, the functionality of scanning a UPI QR from a e-rupee app can also be enabled. In such cases, settlement will be based on the UPI settlement timeline. So there will be fixed period. Within that period, the settlement will take place. Now, these are the different types of CBDC. There are mainly two types of CBDC. One is the wholesale and another is retail. Wholesale is leading to the I can say that large value transaction, which is always happening what? Between bank to the bank, not individual to the bank. So wholesale CBDC is used by the financial institution and intermediaries to streamline the interbank settlement. It is only for interbank settlement. It is operating within the restricted ecosystem. The ecosystem is what? Among the banks or financial institutions. It enhances the efficiency, speed and security of the wholesale payment system by using the functionalities of programming and smart contracts. But that is among the banks. For the, I can say that large value of the transaction, large value transactions. It is focusing on improving the financial systems infrastructure and reducing the settlement risk. So it is among the wallets. And if blockchain is involved, all the transactions are being recorded on blockchain. So trust will also be there. There will not be error. Coming to the retail CBDC, which is meant for the individuals, where you are doing the daily transactions. That can be done like wallet to the wallet or person to the person. Again, there are two types of, I can say, this is another category. You can categorize the CBDC transaction. One is the account based, another is the token based. In account based, you have to prove your identity. Where in token based, you are proving identity based on holding some certificates. That is your token. So in account based, ownership of CBDC is linked with the identity whereby transaction is an update of a payer and payee balance. So like wallet to the wallet transaction. But token based format where ownership of CBDC is linked to a proof. I am encrypting or I am digitally signing that token and I am sending that token to you. So it is like same like the NFT. Is it same like the NFT or not? Yes. It is having the fixed value. But here you are performing the transaction by encrypting the transaction and the verifier will verify whether it is really coming from you or not by using your public key. There are mainly three types of model, CBDC model. One is the direct model, another is the indirect and hybrid model. In direct model, you can perform payment person to the merchant or person to the person via the central bank. Where there is no intermediary like commercial banks. So all parties should hold an account at the central bank. Payment will simply be transferred from one account to the another and all claims will be backed by the central bank. The central bank issues the currency and manage the permission system to clear the transaction. In addition, the features like know your customer and anti-money laundering complex requirement all can be met by the central bank. But when commercial banks are involved, it is like indirect model. In this indirect model, central bank pass the digital currency tokens. Central bank will pass the digital currency tokens to the commercial bank, same like the physical currency. Where RBI is issuing the, I can say, physical currency to the banks. And you can perform settlement with the commercial bank. But there will be settlement between commercial bank to the RBI. So in this case, The tokens are given to the commercial bank or non-bank financial institute like fintech, which then distribute the currency and handle the KYC and AML requirements. The claim for currency is on the commercial bank, not at the central bank. This is what the hybrid, this is what the indirect model. But there is a hybrid model also, where it is a big proposal of the central banks are working on the hybrid model, whereby the central bank distributes CBDC to a regulatory intermediaries. Otherwise, it may reach to the water. Whole work is happening at the central bank. If it is like centralization, work should be distributed here in this case. That is why intermediaries are there, commercial banks are there, which are given the authority to further give the or distribute the tokens to the individuals. Same like the physical note. But the claim will remain on the central bank in case of hybrid model. But the KYC and AML requirements should be fulfilled by the intermediaries. So, in case of wholesale CBDC, it will obviously use the direct model, because there is a settlement among the water. Settlement is like bank to the central bank, not from the individual user to the central bank. In retail CBDC, you can have the direct, indirect and the hybrid model. So, indirect model can be called as a two-tier model. So, if I will talk about the retail CBDC, monetary system is like customer is there, he can have the cash, he can have the direct claim to the central bank. Another is retail CBDC, direct claim via the central bank through the wallet, not through the cash. Similarly, bank deposits or savings are there. You can have the direct claim to the commercial bank, and commercial banks are doing the settlement with the central bank. This is what the architecture or procedure with retail CBDC and monetary system. Now coming to the Bank of England. So this is the proposed two-tier CBDC model. Now before going through this two-tier CBDC model, what CBDC is offering? It is offering the what? Resilient payment system landscape, avoiding the risk of new form of private money creation. I'll tell you, physical notes can be duplicated or printed. Digital notes, if it is on blockchain, same like cryptocurrency, digital cash, or I can say digital currency on the blockchain, it is difficult to do this. So security feature is also there, supporting the competition, efficiency and innovation in the payment, meeting the future payment needs in a digital economy. So because it will be the fast settlement of the transaction. If I want to transfer money from India to the USA, I can use the cross-border CBDC. But if I am going to the one of the shop in my region and I am purchasing item, I can transfer the digital cash or digital coins or digital currency from wallet to the wallet. So it will be faster settlement. I need not to rely on my bank at that time. Otherwise, you might have seen many incidents. You are going there, you are scanning the QR code, then you have to wait for the approval. And if that server is down from bank side, then you have to wait, or you have to find the another option to perform the transaction. Improving the availability and usability of the CBDC, central bank money, addressing the consequences of decline in cash, because cash decline will be less compared to the other form. It is as a building block for the better cross-border payments. So this is two-tier architecture by the Bank of England, where users have to register with the payment interface provided to access the CBDC. Payment interface provides the authorized and regulated firms, providing the user-friendly interface. So the banks and others are kind of like intermediaries. And there is a central bank core ledger, which is issuing the tokens for the intermediaries, and intermediaries are distributing the individuals. This is what the two-tier architecture. This is the overall current status. So you can track this status of the CBDC in this world using this link cbdctracker.org, and you can see that some of the CBDC projects are cancelled. So, but most of the countries are now going to adopt this. So most of the projects are the like proof of concept level at pilot level or launch level. In some of the countries still such projects are at the research level. So if you see in India, by February 2025, the CBDC project is at the pilot level, and already e-rupee digital coin is already introduced in India. Now this is two-tier, I can say CBDC model for the cross-border CBDC. Now I am talking about the involvement of two CBDC. Within a country, you can have the one CBDC, means one central bank digital currency, and you can perform the transaction like person. But when multiple CBDCs is involved, you can perform the what? Cross-border transactions. So consider the infrastructure tier of the CBDC1, which is in India. Infrastructure tier 2, that is CBDC2 in, let's say, in USA. So central bank, there will be central bank which is issuing the CBDC, which is issued to the intermediate authorities, who will distribute those CBDC tokens to the users. And these transactions can be monitored on the blockchain at the India level. Because the transaction can happen what? Among user to the user, user to the bank, or user to the merchant. All transactions can be monitored within at this CBDC infrastructure. Now I am talking about this user would like to perform transaction to a user or merchant in another country, that is CBDC2. There should be some interface. There will be interface. So in this paper, they have mentioned the universal payment channel. So these are at the research stage, different solutions are there. I am just showing you one example where user with wallet provider can perform transaction to the user in USA who is also having the wallet, and you can perform the transaction. And this currency conversion will take place by the taken care by the UPC hub, Universal Payment Channel. This is what we are doing with the international credit card also. Fine. But here all this will provide the faster and efficient way to perform the transaction. Now what is the role of blockchain in CBDC? So in this diagram already it is mentioned, the transactions should be recorded on the blockchain. So, and it will build the trust on the CBDC. Otherwise, if transactions and what your CBDC is given to the users, if there is no monitoring and tracking, it is difficult to build a trust. If I am performing transaction to you, and if I am not able to see that whether the transaction is done or not, in your mobile wallet it will be reflecting. Tomorrow it can be deleted, but it should be recorded on blockchain. So it will provide the what? Tamper-proof evidence that I have transferred coins to you, I have transferred digital currency to you. Smart contracts, so you can provide the regularity also within smart contracts while performing the transactions. Security, data will always available through the blockchain. So blockchain is offering such features to enable the wider adoption of the CBDC. Data availability will always be there. Data integrity. Then efficiency, because it will be the faster settlement compared to the other form of performing the transactions. So This diagram, this table I have taken from this one of the paper where comparative analysis done between traditional banking, digital banking. This is what currently we are using with net banking. That is what digital banking, or with mobile, whatever we are doing with bank, that is what digital banking. Then CBDC, blockchain based CBDC. So control structure, if you see, traditional banking is centralized. Digital banking centralized. CBDC centrally managed by the central bank. But blockchain is the decentralized. So CBDC with the blockchain can give the two things. Control is with the central bank, but structure is the decentralized. So it is providing centralized as well as the decentralized approach. Security level, where blockchain is there, it is high with the central bank security and cryptographic techniques. Transaction speed, this is providing the fast using the centralized control, because control is given to the central bank, where transactions, recording and other things are happening on the blockchain. Cost, it is very low to the moderate level of cost in case of the CBDC with the blockchain. Accessibility, high dependent on the national infrastructure. So accessibility we cannot evaluate now. How infrastructure each country is, how each country is investing on infrastructure and building the infrastructure of the blockchain and CBDC. Then we can give the comment on the accessibility, that how much it is user friendliness. Currently apps are developed, wallets are there, but infrastructure like blockchain nodes, trust mechanism. So you can apply the proof of authority. Obviously, authority is required to confirm those transactions. You cannot go with the proof of work. Or if you are going with the proof of work, again, only authorized users should be able to perform that block mining. So it is better to go with the proof of authority. It is providing the immutable records due to the involvement of the blockchain. Smart contract, which depends on the policy. Which policy or what kind of policy that central bank would like to enforce for performing the transaction through the central bank digital currency. Based on that, policy can be enforced in the form of the smart contract. Regulations. So strictly regulations by the central bank. Infrastructure, it is centralized and decentralized network nodes, and service is 24/7 hours. But in case of traditional banking, it was limited hours, working hours are limited, and that is why it has given a birth of the digital banking, and after digital banking, CBDC, now blockchain based CBDC. So high availability is there. Identity verification, so it will perform the strict KYC. Now recall the eKYC application I have covered on blockchain. If that blockchain is integrated with the CBDC blockchain, it will be very easy to perform the eKYC. Now you can think that this is like financial application of the blockchain, but there were other application of the blockchain can be integrated with this to streamline the work, and that is why national blockchain framework is exist. Because different blockchain, and it should create it like consortium of the different applications. Throughput, high, designed for the large scale transactions. Scalability, which is also high nationally and scalable also to the cross border also. So I can say that blockchain is, CBDC is having its own advantages, and blockchain is helping for the wider adoption of the CBDC. So this is one of the application of blockchain in the financial domain. So in this course we have already seen that blockchain is helping in the various e-governance with various domains. This is also one of the domains where blockchain can give the promising results.